Hey guys, what's up? Welcome back to my channel. So today we're going to be looking at interest only versus repayment mortgages. Now this is a very common question that I get amongst first time buyers, and particularly amongst like newer investors, so people that are looking to get a buy-to-let property as their first purchase. Now before I get into the details, so like the main differences between the two and why you might get one over the other, I'm first just going to say that typically if you are an investor, you're going to want to get an interest only mortgage. However, if it is a residential purchase that you're getting, you should probably go for a repayment mortgage. Now at the end of the day, the decision is totally yours. I'm not a financial advisor or anything like that. This is just my opinion and basically how it tends to work. So yeah, residential purchase, likely repayment mortgage, and if it's an investment purchase, then yeah, interest only is probably the one you will go for. Okay, so now let's take it back a little bit. I've told which option you'll probably want to go for, depending on your situation and what you're buying the property for. Yeah, let's look at the main differences and then come back to why you may want to go for either option. So let's first of all start with interest only mortgages. Now the main thing about interest only mortgages is that basically over the term you're only paying back interest on the loan and not repaying the capital itself. So let's look at an example of a £150,000 mortgage, okay, over a 25-year term. After that 25-year term, you still owe a lump sum of £150,000 to the lender because you actually haven't touched that capital, like you haven't paid back any of that capital. You've only been paying interest on that loan. So at the end of the term, you still owe them that, big amount of money. I do just want to add, however, that, during that 25-year term, if you did start off with interest only, and then at some point you decided that, no, I wanted to repayment, you can actually do that. And then by doing that, you can make sure that at the end of the 25-year term, you've actually repaid the capital and you don't owe the lender a large lump sum. The second thing about interest only mortgages, and basically like the main advantage, is the fact that, your monthly mortgage payments are a lot lower because obviously you're only paying the interest and not the capital back. So yeah, because of that, this can definitely be very appealing to a lot of people, and it's basically the reason why investors would go for an interest only mortgage, because it makes your mortgage payments cheap and increases your cash flow. Now let's look at repayment mortgages. So they are basically like the opposite of an interest only mortgage. So with a repayment mortgage, you are going to end up paying the full capital back at the end of the mortgage term. So going back to our £150,000 example, if you had a repayment mortgage at the end of that 25-year term saying that you stick to repayment only and you don't move to interest only, then that means that you would have paid off that money and you won't have a huge lump sum to pay at the end to the lender. Now although with a repayment mortgage your monthly mortgage payments are going to be higher than if you went interest only, the fact of the matter is that the amount of interest that you pay over the full term is going to be a lot less than if you went with interest only. And the reason being because the lump sum that you're paying the interest on is actually reducing year on year, rather than with an interest only the lump sum is staying the same because you aren't touching that capital. And then the final thing with a repayment mortgage is the fact that you're building up equity in your property a lot faster than if you went for an interest only, because you're paying back the capital that you've borrowed each and every time that you make a payment. So year on year the capital that you owe is going to reduce, and therefore your equity will also increase. Now of course with an interest only mortgage you're still able to build up equity in a property, because at the end of the day house prices generally increase over time, and so you're still going to have that on your side. The only thing is that you still have the capital that you borrowed to pay back to the lender before you see your gain from that increase in the property's value. Okay, so now that we've looked at the differences between the two, let's look at why an investor would go for an interest only mortgage. So first of all, it's going to increase your your monthly cash flow, because the monthly mortgage repayments are a lot lower. So that means that the profit that you make from the rental income from that property is going to be a lot higher, because you've reduced your monthly cost in one way. The second reason you'd probably want to go interest only is for mortgage interest relief and also tax benefits. So basically if you buy a property under a limited company and not under your own name, you can benefit from this sort of tax relief. So essentially you're able to deduct your mortgage interest before declaring how much you make from that property. So before you declare this is how much rental income I'm making, you can deduct that mortgage interest, and that's going to reduce your tax bill. Now I don't want to go too much into this because this whole taxation thing in property is not my area. I definitely advise getting a good accountant if you're trying to do property in this way. And now in terms of paying back that capital that you owe the lender, because obviously with an interest only mortgage you would have only been paying interest on the loan and not paying back any of that capital itself. When you are doing an investment property, when you go interest only, you can still rely on the fact that with house prices generally they are growing, okay, they are going in an upwards trend. And so if we pick up that example of a 25 25-year term, over 25 years, you can expect that, you know, property prices are going to grow like significantly. And so as an investor using an interest only mortgage, you can rely on the fact that, you know, the house price would have increased in value to the point that you can just sell it at the end of that term, and, you know, basically you would have paid back the capital that you borrowed. So you don't have to worry about the fact that, you know, you have to come and find this huge lump sum, because the property really should have just paid for itself. And finally, in terms of an interest only mortgage, as an investor, you still got the rental income that you're getting from the property, which you can use towards paying that lump sum at the end of, you know, the mortgage term. So yeah, with interest only mortgages for investors, there are a lot of options when it comes to like paying the lender back. And so really, this is why you'd go for an interest only mortgage as an investor, because you can benefit from more cash flow, you know, whilst you're using the property to generate money. And yeah, basically that payment at the end of the term is not going to be a biggie for you. All this being said, however, as an investor, it's important that you choose a good investment location and also a good investment property to be able to benefit from all of these things that, you know, I've spoken about. So if you need any assistance with that, you can sign up for my property sourcing service. I've linked that in the description box. So yeah, if this is something that you're interested in, you want some support with finding a good property, then I can definitely help you with that. So now let's look at why you should probably go for a repayment mortgage if you're buying a residential property. So first of all, at the end of the term, you would have paid down your whole mortgage debt. So that property is yours 100%. You own your own home and nobody can take that away from you. So I can imagine if you bought the property for you to live in, that would be an amazing feeling, knowing that you have something, an asset that is, you know, actually yours, and there's nothing else for you to pay. The second advantage of getting a repayment mortgage for a residential purchase is the fact that you pay less interest over the whole term, okay? So if you're not buying a property for investment purposes, there's literally no point in paying interest, because like there's no advantage to you, or paying more interest than you should. So yeah, if it's a residential purchase, you want to avoid paying like loads of interest for no reason, because it's just not worthwhile. And finally, a big reason for you to go for a repayment mortgage if it's a residential purchase is because you avoid this whole lump sum thing. So you don't have to worry that, you know, at the end of your mortgage term, you have to go and find this huge lump sum of money to pay your lender. You don't need to worry about that because you've paid it over the term. Now, if you don't buy a property for investment purposes, like, you know, what's the likelihood that you're going to have this huge lump sum of money to be able to pay a mortgage lender if you only went for interest only? It's unlikely, right? Unless for some reason you have this huge pot of savings. I know that with residential purchases, you can still benefit from capital growth and capital appreciation in your property, but the fact is that with lenders, they don't like consider it in the same way. They can't just rely on you saying capital growth, because, you know, what if it doesn't go that way? However, if it is a case whereby your property has increased in value, then you can also just sell your property in the same way an investor would, and in that way be able to pay that lump sum back. But yeah, at the end of the day, it still comes back to the fact of, you know, what was the real gain or benefit for you, because you've been paying loads of interest, you know, over this term, and it's just not worthwhile. So yeah, you know, repayment mortgage if it's a residential purchase, because, you know, you just avoid this whole lump sum thing. So yes guys, that has been a look into interest only mortgages versus repayment mortgages. Hopefully you found this video useful. Please do give it a thumbs up if you have, and also if you haven't subscribed to my channel already, please do so that you can see loads more content like this. And as always, if you have any suggestions or topics that you'd like me to, you know, create a video on, please do let me know in the comments, and I'll make sure that I do that. So thank you for watching, and I'll catch you later. Bye.